What's going on, traders? Welcome back to another video. As we said before, we're going to get into looking at the larger time frames, show you how you would go about kind of starting your day and mapping some things out so you're well prepared for market open. All right. Before we do that, I need you to kind of maybe throw everything out the window that you think you might know for a second. Be really open-minded here. Okay. What I want to show to you is something that really helped me when I changed I changed kind of my attitude a little bit, you could say, and my approach and thinking towards the market. And I would say that it did dramatically help, in the end. Okay. So what I'm going to talk about now is what I've said a little bit before, and that's the markets are always trending. There's always a trend no matter what, to the smallest degree. To the biggest degree. Well, 100 years, 20 years, 10 years, 5, 1, 20 days, 1 day, 10 minutes, 30 minutes, always a trend. And when you understand that, I believe the market becomes much more, it becomes less questionable, okay? It becomes more understandable, okay? So when you stop looking at the market in sense of, oh, this stock's going to break out here and it's going to do that and it's going to do this, you specifically look at the market as it's a continuously flowing organism from a high to low fashion that does not care about a breakout and that does not care about a breakdown, but only cares about one thing, and that's statistically following the trend, okay? And that trend can be found on a 1-minute chart, 5-minute chart, 10-day chart, 30-minute chart. And this is what I mean. No matter the time frame, and I'm just going to go, and we're just going to use the right screen for now. We're just going to go on a big screen, right? So no matter the time frame, when we map this channel out, we will always, no matter what, we will always see a high to low fashion. Okay, this is what this channel will do for us. Now you have to change your thinking maybe to accept the change, right? If you've been trading different from this and it's never worked, or it does work and you want to try this, you might have to kind of like get rid of some old habits and really come in fresh with this, okay? So this channel will always kind of give us an idea as far as high, low, okay? So on the 1 day, 1-minute chart, this is the market. That's the market. That's it. Simple as that. Could it really be that simple, Connor? You're telling me all these years I've been trying to learn this is as possibly as simple as it can get? Unless you got something simpler for me and you want to let me know, I'm ready to listen. But this is it, baby. The markets work on a high to low fashion constantly. That's why when you read the books and they say buy low, sell high, they're really not kidding. They're pretty much that simple to a degree. It's more or less you or traders that I believe confuse themselves with too many indicators, too many buy or sell signals. Some guy said do this, some guy said do that, right? You will always more or less notice me trading on like a 1-minute time frame because I'm a day trader. So I'm watching the market from a 1-day perspective. And on the 1-day perspective, the markets are telling me, they're saying, hello, Connor, right? They're saying, hello, Connor. Good morning today. So hello, Connor. Good morning. You're thinking of trading SPY? Well, let us tell you something. The SPY 1-day, 1-minute market pretty much says that on its best day, from a high to low fashion, you could see it trade from 299 all the way to the green line up here of 308. That's it, Connor. Nothing, anything more than that, it shouldn't really happen. If you think anything more than that's going to happen, you're pretty much an idiot. Okay, that's the way you should think. Each day when you come into the market and you're looking at a stock, does not matter the time frame. You will see the trending cycle. And if you try to work anything outside of that cycle, you're most likely going to lose, okay? So as an intraday trader, we would not bet the stock down here. We would not go short, okay? When the stock gets up here to the green, we would not go long. Never. Don't care. We just don't do it. I will explain to you one and only time that you can do it. And when I explain that, I really think the light bulb's going to go, and you're going to be like, wow, it's really starting to make sense. Okay? Because as I explained earlier, remember, it's all a breathing organism. Remember I was saying earlier that Typically, we won't see stocks trade outside this level like more than 5% of the time. So what is that 5% of the time that they do actually trade outside the channel that you're looking at? The only time that's going to happen is if the time that you're looking at is being overpowered by a bigger time frame, okay? So with that being said, this is what the market's telling us each day, that this stock could logically go from 299 to as high as this green line on the day. But anything outside of that, it's just like, no way, not going to happen. So when the stocks reach this point, we'll typically go the opposite way and we'll reverse the market because it's a high to low trending fashion. So we came from the selling side into the buy side, into where we should not go outside of, let's go long. Market pushes us back up into the sell cycle, we'll start selling. Market comes back down to the buy, we'll start buying. If market breaks out and down, that means there's a bigger time frame that is more overpowering than what's going on a 1 day, 1 minute time frame. Okay. So now that we've explained that, let's look at the larger time frame. This is how you're going to start your day. Okay. So if you come into the market and let's say you wanted to trade the stock Apple. So we're going to go over to Apple. You can do this with any stock. The first thing you're going to do is you're going to go to your daily time frame. Okay. You're going to go to 1 year, a 1 day chart. You're going to look at where the price is. And when you look at where the price is, you're not going to be some crazy knucklehead, okay? You're going to think like a human with a brain, okay? You're not going to think Apple's going to move $200 a share today. Why on earth should it move $200 a share? You're not going to do that, okay? It just does not make sense, okay? Doesn't make sense. Remember what I told you? If you want to know how much a stock can probably move in a day, just go to the intraday time frame with your channel and go bing, bing, there you go. That's about as much as it can do. Ready? Dink, 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 dink. No more out, no more below, back in the channel, okay? So literally you can go intraday, look at your channel and go, that's pretty much about as much as a stock should move from a high to low fashion, okay? It could sit and trade here all day in the upper side and never go down to the bottom. It could do that. But you already know that it realistically should not really be going too much outside of here and not too much below there. So we would say that on the day, Apple has a projected move of 320 to 317. So it has about a $3 potential ranging move. From a best high to low fashion, we could maybe expect $3. So if you come into the market and you buy it thinking it's going to go $10, you're going to buy it. It's going to go up to here. It's going to hit resistance and sell down and go shit. And then it's going to go back and you're going to hit resistance. It's going to go down and go shit. Never going to make a $10 move for you because it's just not supposed to make a $10 move because that is not what the market is offering. The market is telling you what it's offering here on Apple and it's $3 per day right now. That's the market. That's what's available. Take what you can get, right? When people say, oh, I was in a trade and I didn't take my profit and then it rolled over on me. It's not that they didn't want to take profit. It's not that it couldn't go higher. It's that they probably didn't yet know how to understand the market efficiently to know what the market's offered, okay? When the markets are offering a potentially 10-point range and it's only moved $4 in a day, yeah, you got another $6 it could probably move. You might want to hold. But if it's only supposed to move $3 and it's already moved $2.75, there's really not much more you can get. You probably just take the win, okay? All right, so now that we know, right, now that we know what Apple's move is, right, let's think about this. So if we knew that Apple really can't move too much more outside of this level on a 1 day, 1 minute chart, let's go ahead and put the lines there. So we're going to put the line here, go ding and ding. Now I'm actually starting a little different, but I thought that this approach would be better for teaching. Okay, so let's put 2 lines here like ding, ding, right? Shouldn't go too much outside of that. Remember what I told you, though. The stock can go outside those lines. It can. But what would have to happen in order for the stock to do that? The stock would have to be overpowered by a bigger time frame, meaning that people are selling the stock on, like, say, a 1 year chart so heavily that the intraday chart support just couldn't hold up. There's too much selling pressure, okay? That can happen, all right? So now that we have these 2 lines mapped off, we would be able to say that we probably shouldn't go too much over 320, 321, or really kind of below maybe 316 to 317 or something like that. So now we would go and look at the 1 year chart and we'd say, do those lines, we'd first say, do any of those lines we just put on our chart, do they match up with a large time frame trend? Because remember, that was the intraday 1 minute trend, support and resistance. do the 1 day, 1 minute support and resistance just so happen to line up with any long-term trend lines? Because if they do, then that really tells us that that's a good buy point, potential support or resistance, right? If it's matching up the intraday to your long-term, bingo. All right, so let's see what happens. Almost, almost, right? But now let's put the line here on that. So let's see, right? So you can see where it happens. I put my line here. This is the 1 year day mean normal trend. Let's put a line there. Let's see how that spot interacted throughout the day. Pretty good, right? So our intraday level was telling us already where we should be buying. But if we would just take it another quick second, just very quickly, to look at the 1 year day chart that day and say, that's where the trend line's at. You could have even done this. You don't even have to put a horizontal line there. You could go to your trend line and you could overlay a trend line here, because when you're on the 1 year day chart, this trend will not appear when you go to a 1 minute chart. So what we would do to help us is we would actually overlay a trend line on the 1 year day trend line. Okay, so we'll do it like that, get as close as we can. And then we go to the 1 minute chart, and we now should have a slightly uptrending white line that should be more accurate than the dashed white or red line. Okay, so now you can see that white line slightly uptrending. That is the 1 year day trend on a 1 minute time frame. You would not otherwise see it on a 1 minute time frame unless you had plotted or overlaid some sort of line over that line, okay? And this is another reason why trading can be so complicated, is because there are so many things for the human brain to process all at once during the day. You're about to put a bunch of money on the line. Is it going to be the right thing to do? Am I right or am I wrong, right? Those are the emotions playing. And there's so much to process that it can be hard, and you will miss these opportunities because you just didn't simply take the time to look at the chart and put this line on, and to know that this is a strong daily chart, okay? And that this could probably hold support if we go there. So we just wait patient. If we get there, trade opposite. Be patient, wait, trade opposite. Because you don't have to go short. You don't have to catch this down move. The market's already moving. Remember, this is the market from a high to low fashion. If the markets came from here to here, the markets are already moving. The market move is underway. So you getting in is you basically chasing into a market to a degree. But if the market comes all the way to the low and you trade opposite off the low risk entry and we bounce, you're now onto a potentially new market. You are no longer chasing. Excuse me, you're just riding the market, okay? There will be many opportunities where what I just said pretty much is very contradictory and makes almost no sense. So again, take that with a grain of salt to a certain degree. As you get a little more experience in your belt, you're going to kind of understand what I mean, is that essentially this is the market, high to low fashion. And once the market has started moving, it's not that you can't trade it. Just know that you're kind of jumping into a market that's already started. You're not starting the market. But if you waited till we came down here and just bought the bounce, you'd be starting the market here. You are of the first in on the most low risk entry of a potentially new trending market, okay? So the key takeaway here is that what we're going to do each day when we start our analysis is ideally we're going to go to the large time frame. So if we wanted to trade Apple, we will start with the 1 year day chart, and we are going to look at where the price of the stock is, and then we are going to pick our next closest, or we'll pick our first closest big long-term support trends or resistance trends. In this case, for Apple, it's a support trend on the daily chart because the price is above the line. So we would go like this and be like, okay, this is our 1 year day trending support. I'm just going to, for whatever reason, you can do this. You don't have to do this. I'm just going to change this because I'm going to put a couple on. So we're going to make this purple, okay? Now what we'll do is you make sure you do this too, is you're going to change this and you're going to go to a 180-day 4-hour chart. If you don't have that, you can go here, or sorry, you can go to customize list, and then you can just make the time frame, add the time frame, and you can customize it, right? So you can just make it and add it if you don't have it. But for now, we're just going to go to a 180-day 4-hour time frame. When we do this, what do we say before? We're going to pick our first or next closest support, and not support or resistant. No, and it's both. It's a plus sign. Okay, first closest support and resistance trend line, and you're going to do the same thing. You're going to map a line over top of those. So, and you can do the horizontal ones. You can do the trend line ones. Do note that these lines will shift continuously every day, every 1 minute. They're going to change a little bit. So you do have to watch them and readjust appropriately. Experience will help with that. Practice. Okay. So now we're going to put like a trend line over this line right here. And then we're going to do one here over this one. And the reason we did that is because those are the next closest big levels that we have to go off of, right? So if the markets decide to go down, that's our next support level to buy off of. If they go up, that's our next resistance level to sell off of. If you're long, this is your next sell target in a short-term move. That's your next sell target, right? Or like profit take level. If, like arguably if you were somehow short this and it ripped down to here, that would be a good area to take off. If you think that the markets are going to keep breaking up, then this is a great dip buy level. If this snaps down, you dip buy that, right? Dip buy that until we're crossing below, then you might stop out, right? Yeah. When the stock is actually changing trend is probably when you might stop out, right? So the goal of trading is to buy off of the low risk entries, because because there's usually enough people willing to do it that you're going to be right. You might not be right fully all the way up to here when you want. It might go sideways and then it might come back down some. But if you trust the system and you buy off the low risk support, then you're staying in the trade. And if you don't stop out until you break the low risk support, you're still in the trade. So the goal is not necessarily for the stock to always stay above your support. The goal is for you to be willing to trust the support when we first get there, because that's going to allow you to stay in the trade. And then when it actually does break, to take a tiny loss or break even trade. Whereas if you thought this was somehow like a flag pattern and you started buying this consolidation and then you're wrong and it breaks here and then it doesn't hold support and snaps, you just went from entry here for E and then exit here for E, whereas you could have had entry, exit. Okay. So what we're going to do is we're going to map off those big time frames. And the reason we do that is because the longer term time frame trend lines will always, in most cases, supersede or be significantly stronger and or more important than your intraday level. Okay. So if we were on Apple running into this price of $340.99, right? Let's say intraday Apple had resistance at 342. We were looked at our intraday channel and said 342 is the resistance because that's where the channel and the resistance is at. But we were coming up to this 340.99 before we would reach obviously 342. We would say, no. We don't even consider the 342 mark as a logical zone to get through yet because we haven't even gotten through this 4-hour trending resistance. Until we get through the 4-hour trending resistance, we can't even consider the 342 as a logical price target today because it doesn't make sense. We have a big trend to get through, and until we get through that trend, we can't be like, hey, we're going to 342. Because most stocks do not break through trending support or resistance or support in general on their first try. There's usually a big enough market trading the system and trading off the trend to at least stop it on its first try. Stock goes crashing, crashing, crashing. And here's a perfect example for you guys that we can all relate to on the S&P 500, SPY. Look at this long-term chart. This is how I predicted the bounce in the market. I predicted we were going to start. It's a little different now. The trend was it was actually like right here. The trend line used to be like right there since we've moved up a bit. But that's where the trend was. This green level in the middle, that's where it was. And that helped me predict when we were going to have our S&P 500 bounce after the whole coronavirus pandemic, right? And I sent it. It's not like I'm talking out of my butt. You know, I actually sent a big email about this. I'm like, hey guys, it's called a 4-week game plan. Long story short, you're going to be long the stock market in like 4 weeks. And ever since, we've pretty much been going up. Okay. So this system is how I was able to kind of predict where the markets would probably subside and probably bounce, right? So think about it like this. Oversold, right? Way overbought, all the way back to the normal trading trend. Okay, so when we had this coronavirus pandemic, the markets only did actually, as irrational as the move sounded, on a 20-year chart, it was actually a very logical move. At the end of the day, all we did is just go from an overbought cycle to a normal trading trend cycle, and then we bounced. Now, believe it or not, guess where we're at again? We're back into an overbought cycle. So realistically, the market had a great dip buy, and now it's terrible to be buying the stock market again because you're all the way into the upper side of this cycle. Now, we could go to 374, but when you're back at 374, you're back in the high selling cycle, and then you can still roll over, right? So until you actually get to the low and to the greens, right, until that happens, you've really never been presented a really, really great buying low-risk opportunity. So that's why I've been bearish the market for so long, because I've known for the longest time that we're pretty much just in this overbought cycle. I've been a bear since 2018, right? 18, 19 into 20. I've been a bear since we got here. Okay. Have I been right? Yeah. Have I been wrong? Yeah. Right. So being a bear in 2018, drop, goes all the way up to overbought, drop. Now we're back at the same place. We're basically only have like a 10% gain in the market since 2018. So theoretically, I'm still wrong by only 10% that we were supposed to go into a bear market. We haven't really had much gain hold since 2018. So far, we're up 10%. Now, let's say that this long-term chart does hold true. You know, we would probably start to see some sellers coming in around 310 or 312 pretty soon, right? We typically kind of start to see resistance around that blue line. Over, under, back up, hit it. What would that look like too? It'd look like a big head and shoulders pattern. Okay, so regardless, that's how the system works. And so we go off the big time frames first, right? We're going to go off our 1 year and our so here's another good example, all right? So like the stock market, right? What we want to do is we want to go to our closest level. So our daily chart, we have a level here at 316. So we would just go ahead and we would map resistance off here at 316. We'd map one here at 296, and we didn't, you know, and that's it, right? Because we're not going to go all the way down to here. It doesn't make sense right now. All right, then we go to the 4-hour chart. Every morning, whatever stock it is what you do. You go to the daily chart, map off your two most closest support and resistance trend lines that you actually think that it could get to. If it's $35 away and the stock only moves $2 in a day, there's no point of putting it on there because it's not going to go $35, okay? Right, then we go to the 4-hour chart and we go, okay, we have a level here at 310 and we have a level here at 386. So let me tell you, right, let's look. Let me think. If the market on average moves about $3 to $4 on the day right now, do we think it's going to get to 316 when it's trading at 306? So again, the time I'm making this video is a Sunday. So on Monday morning when the market opens, do we actually think the stock market's going to go from 305, 306 to 317 if it on average only moves $3 to $4 in a day? Probably not. So we know that this probably isn't going to happen up there. So we could just probably take it off. But we have this line right here at 309 and the price of the market's 306. And if the market on average moves $3 to $4 on the day, then this seems like a very, very logical target to reach. And what do we know? We know that usually stocks do not break through those levels on their first attempt. So that tells us this is a logical level that we could hit from a statistical average trading perspective. And from just our trading experience, we know that it shouldn't break through So come Monday morning, it's very possible that we have a good short trade starting at 310, and we could have a very low risk entry here to go short with a stop loss just over the 310 zone. And if it works out, great. We started at the best point possible. If it rolls over and goes all the way down, fantastic. Perfect entry. Okay. If we go short, drops down a little bit, starts to bounce back, we can cover some. And if it goes and breaks over, then we stop out. But that's the beauty of it. Finding the perfect low risk entry so that there's enough people that are willing to participate with you in that market to create the move that you're all thinking enough to at least make a little money, not have a big loss, or get out break even, right? Whereas it'd be worse to watch it fall short here and then get short and then get bounced and be like, well, this is resistance until we break over, and then you break over. And so now your loss, right, is from down here all the way to up there versus just this little tiny section, okay? That's the key to it, all right? So the goal of the long-term timeframes is to pick the closest ones that make the most sense that you could actually get to, right? If they're so far blown out of the picture, then probably not going to happen, right? So we take the stocks that we know each day are coming up to these big levels on the long-term charts that would normally supersede the intraday time frame, so that we can find kind of these bigger moves, okay? So now what we're going to do is we're going to hash out in this video. We're going to start a new one up. This is where I'm going to kind of map out the levels and then show you what it might look like coming in on the intraday perspective. So stay tuned. We got some more good stuff coming your guys' way.